very much. You can still hear me? Yes, good, very good. Well, I think the last slide pretty much did my job for me. Expectations of tech earnings have gone up and valuations are nowhere near where they were in 2000. So that's all good. I've still got a few slides to go through, so you'll have to humour me. Quick question. How many people in the audience have used ChatGPT? Hands, maybe? Okay, that's pretty good. Just trying to gauge where we're at in terms of how technical we're going to get in this presentation. So, lots to cover, not very long to do so. Hopefully, you'll see where we are. So this is the Polar Capital Tech team. I've been very lucky to be part, or have been part of Polar for more than 20 years. I've been doing technology now for an awful long time. And my first introduction to technology was, I think in 1985, my first home computer. Nick and I are not dissimilar ages. We're both sort of digital natives, grown up with technology, and we've been very lucky in that we were born around that time, and that we both ended up at Polar, and we've been working together for a long time. So we run 3 products. We launched an AI fund more than 6 years ago because we were excited about what we saw then. We were beginning to see breakthroughs in narrow fields of AI, and we felt that was enough for us. We felt that there was going to be a massive opportunity within the technology sector relating to AI. We also felt, I suppose you could argue, greedily thinking about the opportunities that might fall beyond the boundaries of technology, and therefore we wanted to launch a fund to be able to capture some of those. And so we launched that fund, as I say, nearly 6.5 years ago. And anyway, that's where we are. So we're one of the largest teams in the world, certainly in Europe. And I think you need a large team to be able to tackle what is not just a very big, but also dynamic sector where things change all the time. Humbling stuff, even as a domain expert in inverted commas. So there's the team, and I'm very proud of it and the characters we've assembled. So very quickly on the market backdrop, because I think you've heard plenty and also very good stuff, and we agree with almost all of that, which is, I think there are years where you get paid to make big calls against the market, and then there are others where maybe the consensus view is about right. And we've been relatively constructive on inflation over the last few years. Felt like it was more akin to a post-war 45 to 47, where you had a big spike in inflation because of supply-demand imbalances post-war, and that sort of happened with COVID, where an awful lot of people came back from near-death experiences collectively and wanted to buy things, anyway, the rest is history. We're seeing inflation recover. We're seeing productivity begin to pick up. It's been a real missing element of the story within the US, particularly over the last few years. We're seeing the labour participation rate go back to all-time highs. We think COVID's done that. Some of the work from home stuff that's enabled female participation rates to move to all-time highs. So exciting stuff. And again, you can see here the drivers of long-term performance for the market. Clearly, I'm not here to talk about that, but we think that AI will continue to drive some of these productivity gains we've seen. We're really at the beginning of the AI story. In terms of the outlook, again, we think rates have peaked. Timing of the rate cuts, magnitude of the rate cuts remains to be seen. We don't really have a strong view on that. Happy to be sort of led by the market, really. We watch real rates, we watch nominal rates. And that has, those things have big implications for the style of markets, the breadth of markets, whether or not small caps can participate, whether or not loss makers can participate, for sure. But in terms of the overall backdrop, it feels more supported than it's felt for a while. We've got the Fed put back, if you're familiar with that phrase. Policymakers are now back on side, having been very much offside, focusing completely understandably on inflation expectations, and it's been a miracle, really, hasn't it? I mean, immaculate disinflation or whatever it might want to call it. The fact is, the Fed has raised up rates phenomenally. Inflation expectations they remain completely intact, and we've been able to, so far at least, normalise labour markets. Anyway, again, probably not here to hear me talk on these things, but I think a constructive backdrop is certainly our null hypothesis. Clearly, though, there's been winners and losers. And obviously we've been big beneficiaries of that because of the narrowness of last year's market, probably the most narrow market that anybody can recall. Tricky if you're not in those stocks, fabulous if you are. And again, I think you heard earlier about active share. The way that we've been running the trust, or I've been running the trust since I took over running it in 2006, is the idea of having obviously a reasonably high level of active share. That's how we outperform or attempt to outperform, but also making sure that we have the best that the index has to offer within our portfolios. And that's been very lucky this year or last year because we had Nvidia in there when things weren't looking great, candidly. And we were able to rebuild that position and go overweight in the second half of last year. So we've had Apple since I joined the firm. I bought the stock on May the 1st, 2003, and we've held it ever since. And so actually sometimes having an index, a really good index, when you're hitched to the very best vessel, it's not necessarily a bad thing to have good index exposure. And that's certainly helped PCT over the years. The plan, obviously, is a broader participation. That's what everybody wants to see. It's probably the most consensus view looking at 2024, candidly. When I sit down and write my strategy piece every year, which I'm doing right now, if you look for consensus positions, it will be broadening market. And I think that's what everybody wants to see. I think everybody's wanted the UK equity market to work for the entirety of my career, and it hasn't. Anyway, we'll see what happens. We are, as active managers with 10 people, would really rather like to see a broader market. We would do better than maybe we would just do better if we were just 2 of us buying those 7 stocks. The bad news, good news, if you're long PCT and other funds that have these stocks, is that these companies have delivered phenomenal returns, as you've already heard. And when you look at the direction of earnings revisions to the Mag 7, it reflects their performance. So again, there are similarities with what we've seen in previous cycles. Unfortunately, if you're not in this trade, it's very hard to get on it now. Now, I should just quickly caveat what I'm saying with the fact that NVIDIA reports in about 2 hours and 5 minutes. So you may want to take everything I've said, chuck it in the dustbin, or record it and have a good laugh for many years. We don't know what that's going to do, obviously, but right now, NVIDIA is at the epicenter of the AI story. And I'm going to talk to you about that in a second. So look, unfortunately, wherever you look, you see the same divergences, big, small, value growth, S&P 493, S&P 500. It's the same story, which is there are some companies that are at the epicenter of a very important, I think, technology moment, and have delivered phenomenal returns because they're natural monopolies, and people have mismodeled them. And if they want to, they can earn kind of what they like. That's what natural monopolies can do. So that's why we have this weird setup in stock markets. Let's talk about AI. The age of AI has begun, I think is a fair statement to make. And we'll try and talk through that. We've made some reasonable changes to our portfolios that really try to capture this. I was there in the 90s, for better or worse, mostly worse. I was there after the financial crisis. We were buying this sector pretty well when we traded on a very big discount. We were very early to the cloud. We're very excited about the cloud. We likened it to electricity before many others, I believe. Anyway, right now, I think we may not be early to this, but we're at the beginning and the foothills of what looks to be a very significant moment for technology, but also for the world. We want that to be reflected in the portfolio. Now, it's not all in NVIDIA, although it is a reasonably large part of the portfolio. It's also in other chip makers in Taiwan. It's in cloud companies and so on. We'll talk about some of the stocks shortly, but I just need to communicate the fact that a very large part of this portfolio is in AI plays. Companies that we perceive at least to be beneficiaries of the AI story. What is the AI story? The AI story is the idea that we've just fundamentally changed the relationship between humans and machines. And the way we've done that is to be able to communicate for the first time ever in natural language. So when you speak to ChatGPT, you're speaking to it. You're not coding it. You're not learning Python. You're able to speak in natural language and a computer to be able to understand the context of your question and to be able to respond in a way that you understand rather than in dots or binary or in some other language. That's pretty special. Now, this sort of happened, not by accident, but a thing called the transform model was invented in 2017 at Google. And what it's done is changed the course of progress in AI. And these are very complicated slide on the right, which I don't candidly think I can explain well enough to try. But you can see very clearly a change in trajectory in terms of the model complexities that people have been using to build AI systems. And so what was a change 8 times more sophisticated every 2 years has moved into the 275 times more sophisticated every 2 years. That is what we call an inflection point par excellence. I mean, there are very few better inflection points that you'll hear about a lot in investment than this. And as a result of this sophistication of models, and by the way, we're off the charts now, absolutely off the charts in terms of the latest models that have come out of OpenAI and Google. What's happened is that these the models have not just got larger, but they've got smarter, and they've been able to take in a lot more input and then understand context, not of 10 words, but now of, well, actually 1 million tokens, whatever that means. But let's assume 500,000 words. You can drop 500,000 words into Google's Gemini Ultra, and it understands the context of the document. That's insane. That's insane. And by the way, without wanting to sound totally over-promotional, like we're all alive at this insane moment of time. It is insane that the machine can understand that. The reason that we've got there are lots of different things, but obviously NVIDIA's GPUs are critical to this because we've been able to take tasks and instead of doing them understanding order of things in a serial way, the way we speak is, of course, in a serial way. The word I say is the next, coming from the last one. We've been able to take large amounts of data. All these models are able to split that data up and understand them in mass parallelized form. And that is because of the unique attributes at this point of GPUs. Anyway, this is the entire history of the AI story. So in 1956, when a whole bunch of people got together to solve it over the summer and obviously failed, not much happened. In 1985, Mr. Kasparov was beaten kind of by a computer, and really nothing has happened until really the last few years. And this is the size again of parameter count as a proxy for model complexity and sophistication. We've been able to take all the information from the internet and use that as training data, and again, that's taken us to where we are today. We've ended up with these kind of strange emergent capabilities where models are basically able to understand language and understand meaning, which is, again, a first, because words can mean different things in different contexts. We're now also able to understand not just text, but also images and video. We'll come back to that in a second. And the idea will be to fine-tune these models to financial services, whatever it might be that you're interested in. GPT-4 right now can answer you really well on a whole bunch of subjects, but maybe you want to be absolute expert, you'll need to fine-tune models. We talked about this in our annual report. This is old stuff where Amazon basically is now, GPT-4 can pass online tests to become an engineer. And this is an old chart, again, GPT-4 able to pass bar exams, medical exams, and all sorts of things. Now, just to be very clear about this, that doesn't mean that if you ask a good question, it's going to get you the right answer. I mean, lots of humans and lots of fund managers, obviously not the ones here today, will make mistakes all the time. This will make mistakes, but it can also pass bar exams. Again, it's kind of insane, and again, we're alive. So here's some examples, real world of multimodality. This is my dog, Gracie. You probably can tell that she is a long-haired Chihuahua. But computers before the last few weeks and months would not have been able to have told you that that was a long-haired Chihuahua, but now they can. So I uploaded this picture, and it said, you have a Chihuahua. It's a very beautiful one, and actually she can be a bit of a pain. 5 minutes, are you kidding? All right, I'll go faster. There's a Chihuahua. I was having lunch, or dinner, I think, actually, in Edinburgh. I uploaded this to one of my kids, and it came back and said, actually, worked out that I was in Nando's. That's insane. Just a picture of some chips. I'm in Nando's. And if you upload this picture from a bridge program that I was playing, it gives you a pretty good effort at what your opening bid should be. So this is what we mean by multimodality. The machine can actually understand from an image what it is that you're looking at. How about this? This is Gemini. This is the latest version of Bard, Google's Bard. You're able to take a question and handwritten answer to a question about skiing down a hill, and the machine be able to tell you that that's the wrong answer. And here is an omelette being cooked, and the machine being able to tell you from the image if the omelette's been cooked and what remediation you should take if it's not been cooked. Again, so to the investment story. The investment story is about two things, really. It's about the fact that three things. We've been here before. We've seen this type of thing play out before with PCs and internet and obviously smartphone. There are two groups of opportunities. The first one is the visible market opportunity that you see today. Chip makers, particularly chip makers, and anyone involved in the building of the infrastructure of AI. It's a profoundly different infrastructure. I'll try and get to that in a second. Then there's the invisible opportunity. All the things that will happen that we can't possibly know about, shouldn't beat ourselves up about because you can't possibly know them. We didn't know when the iPhone came out that there would be an app store worth trillions, but there is. And we know that these technology gains that we're seeing are going to lead to enormous market opportunities. Again, that's why we launched our fund 6-7 years ago. The opportunity set is gigantic because this ultimately addresses all knowledge work, which, as you know, is probably the most important part of developed economies. And we think, others think that 25% of all tasks can be adopted. Now, you may be thinking, well, this is what people said in the 90s about the internet, but the diffusion rate of technology is very different today than it was in the 90s, when it took years for the internet to actually find purpose and get faster and all of the good stuff that happened. But now we're moving at a rate where 100 million people used ChatGPT in 2 months. So this is the Bessemer moment for the AI industry, where grumpy-looking Mr. Bessemer didn't buy any NVIDIA stock. Profoundly changed steel. People were working on steel for a very long time, but before Mr. Bessemer came along, only 2% of pig iron was converted into steel. Bessemer comes along, transforms something from being a very difficult process and expensive to, in the end, everything. All pig iron gets converted into steel. And the lead application for steel was building railroads, much better railroads than iron would ever allow. And you can see what happens here. We have this explosion in the volume of steel. And the world is transformed by steel. And again, I can wax lyrical about this for much longer than you're going to give me. But you end up with skyscrapers. You end up with shavers or blades. You end up with the tinned food industry that requires a thin sheet of steel for you to be able to can food, and the creation of Campbell's, Gillette, and so on. And that's what we're looking at, I think, when we're right now with AI. That's an ugly slide. In terms of what you need, this is the bit that's challenging. We're moving from a world where you used to have a Toyota Prius as your server, a kind of general purpose vehicle that ultimately could do lots of things, moving to a world of Formula One, because the servers that you need to be able to do training and inference in AI are profoundly different. So they look like servers, they sound like servers, but if you look at the bill of materials, an AI server is $269,000 and a traditional server is $10,000. That's why, by the way, the NVIDIA share price has gone up. It's not, I mean, it is complicated, but it in the end isn't, because the very biggest difference between these two bill of materials is all going to NVIDIA at the moment. Quickly on technology valuations, I've got to quickly touch on this. So we're excited, everyone's excited. NVIDIA prints now in about 1 hour and 57 minutes. Not that I'm counting, but we are at a different point in time than where we were in the late 90s, not just because I'm older, but also because the tech sector doesn't trade at 2.5 times the market multiple anymore. It's true that there are select groups of companies that are expensive, but actually NVIDIA's share price, well, today, the forward PE right now is in the mid-30s. This is not Cisco in 2000. If you go back to the railroads, one of my favorite examples of other bubbles, in, if you like, the dot-com period obviously happened in my lifetime, the railroads obviously did not. But if you go back to the railroad period, the frenzy around railroads that did in the end transform America got to a point where 1.5 to 2.5% of GDP was being spent annually on building railroads. And we don't know what the numbers are with AI, but just to put it into context, the entirety of all cloud compute, of which only perhaps a quarter last year was directed at AI, amounts to less than 80 basis points of GDP today. So we may be ahead of ourselves. The share price of NVIDIA may well fall tomorrow. But we are at the very early stages of building the infrastructure for AI. And I think, again, the frenzy, the dot-com period, all the IPOs and all of that stuff, we haven't had any of that. We've had a concentration of performance in companies that are in the epicenter of this trade. But the aggregate tech sector remains very differently valued, even if it is more expensive than it was a year ago, very different to how it was in the late 90s. So that's the portfolio. Lots of companies that are either involved in the infrastructure of AI or beneficiaries. Very few companies in this portfolio, we believe, are not participants in this important story. I think with that, I've probably run out of time. But again, this just gives you a sense of what we try to do in the portfolio is to construct, as excited as we are about AI and individual stocks, in the end, it's about building a portfolio that's diversified. We have 100-odd stocks in PCT. We try to build that portfolio so it delivers more growth in the index and to do it for a modest premium. And right now, the portfolio is set to deliver nearly 30% more revenue growth than our index for a modest 7% EV sales forward premium, which I think is pretty compelling. I think with that, thank you very much.